Hey everybody, welcome back to another live stream. Before we get into the show, which will begin in a moment, I wanted to let you know that if you have any questions throughout the stream, remember you can always ask them on our website. We have a live chat support ready and able to help you. My team there is available if you have any questions about any of our products, services, or just have a question for fun. Check it out. Link will be down below in the description.
The stream will be starting shortly, but while you wait, you can check out our sponsors 8Cap, Forex Tester, and Superfunded. You can find the links to them down in the description below.
Hey everybody, welcome back to another live stream. Before we get into the show, which will begin in a moment, I wanted to let you know that if you have any questions throughout the stream, remember you can always ask them on our website. We have a live chat support ready and able to help you. My team there is available if you have any questions about any of our products, services, or just have a question for fun. Check it out. Link will be down below in the description.
Coming to you live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Hello, everybody. Good morning. Welcome back to another A1 Trading Show. We are here Monday through Friday on the air, covering markets, talking trading, markets in terms of what's happening in the news, all sorts of good stuff. I'm joined here with our news reporter, as always, Mr. James. How's it going, James?
Pretty good, Nick. How are you doing today?
Good. How was your weekend?
My weekend was long. I had a long weekend of double dose of Taylor Swift chauffeuring.
Double. Ooh, that's big.
I had double duty. I had both on Friday and last night as well. My sister was selling her tickets, so I was able to get my girlfriend day 2 tickets as well Sunday night. So she went again, and the whole process from driving to finally being finished, it's about an 8-9 hour process. And so I did not even get home until after 1 in the morning.
So that was your weekend. That was
the entire weekend. Yes.
For those of you guys who context for people outside of Atlanta, we had the Taylor Swift concert happen this weekend in Mercedes-Benz, the stadium here in Atlanta, and it was crazy, super trafficy all over the place. And James had the pleasure of being a chauffeur for his sister and girlfriend. So that's an act of service. We thank you for that, James. James, fill us in terms of market news this week. Really busy week. What are a couple of things that you've got on your watch list here?
Yeah, so obviously here coming up in a little bit, about an hour and a half, we have, or excuse me, not an hour and a half, in about 30 minutes here, we have ISM manufacturing PMI for the US dollar. So we'll probably see a little bit of volatility off of that. And then going into tonight, very early night-ish, we have the Australian dollar cash rate, their new monetary policy, projected right now to stay unchanged at 3.6%, but we will see what happens with that in the morning. We also have the JOLTS jobs opening happening tomorrow at 10 a.m. as well, leading up to that always happens before the NFP event, which we have on Friday. That is going to be the biggest event of the week so far, or of the week, is going to be NFP happening on Friday, not only for the US, but we also have the Canadian unemployment change as well. A couple other notable things happening Friday: CPI for the Swiss franc. And looking back on Thursday, we're also going to get Euro monetary policy statement, new Euro interest rates. They're expected to raise 25 basis points up to 3.75%. And US unemployment claims happening on Thursday as well. And I'm scrolling through. I didn't look at this before we started. We also have FOMC happening, FOMC statement, federal funds rate happening on Wednesday as well. So this is an incredibly busy week for news events. We got,
probably the biggest week
every single day this week.
Yeah, probably the biggest week we've seen in several months, with both the ECB and the Federal Reserve posting their interest rate decisions. Should be very interesting. And also going into, the next couple months, we'll see where things are at. Are they going to continue to raise rates, so on and so forth? And the markets will heavily react to that. Of course, James does a lot of our coverage on the A1 trading channel, so we'll have plenty of stuff in terms of the news here for you guys this week. James, thank you for the outlook, and thank you again for your service with the Taylor Swift concert.
Yes, I was happy to do it.
All right, James, we'll catch up with you in a little bit. Let's jump into some charts, guys. We'll see what we can find in terms of market volatility. One thing I noticed is that gold here this morning jumped big time. So did the euro, but I wanted to start here with gold, as we seem to be yet again coming up to that fabled 2010 mark that we cannot seem to break to the upside here. So let's dive into this. We're going to start here with gold. We'll go look at the dollar. We'll look at some of the indices here as well. I'll show you guys some trades that I'm in personally, and we'll go from there. So gold came up yet again here, a big pop this morning, as we saw again a rally from 1980, just under the 2000 mark. Now trading as we speak right now, we're hitting that 2000 mark. Watch this week, guys. Yet again, I've got to sound like a broken record here for a second. If we're able to break through the highs here, this could be a really meaningful breakout. Now, I've said that for a couple weeks now, and honestly, as much of a repeating statement that is, it actually means more and more the longer this thing ranges, in my personal view. We've got gold stuck in a very tight range here between 1975 and that 2010 mark. If we're able to break it after all of this sort of tightness, right? It's somewhat like a spring. The longer you compress it, I think the more likely we have a bigger potential breakout here. And my opinion is that it could get us right back up to the previous highs around $2,048 an ounce. Now, this is not the all-time highs, but what I would pay attention to is if we start there, we start breaking to the upside here, I think we get back up to here. And the question will be, can we actually break through those levels to return back to all-time highs, which reside around 2070? Again, we're getting ahead of ourselves. We'll have to watch with everything coming out this week. We have Fed funds rate. We have the meeting there. We have NFP. We have so many different things. This thing could be trading either direction. So I wanted to mark up some zones with you guys to help us prepare. Someone in the chat says, I want to buy the Edge Finder with 40% off on Thursday. So real quick, Alt-Tav, I hope I said your name correctly. Let's drop a link really quick for anybody who wants access to the Edge Finder. Our sale is officially ending here this week. If you guys have not already gotten access to it, the Edge Finder. We are celebrating the 1-year celebration sale, and it is ending right now. So we're going to drop a link to the talk to so you can send a direct message right now. If you are last second trying to get in on the sale, this is your absolute last chance. Click this link. It's going to open up a talk to conversation, like a live chat feature. So you click this. This is what it's going to look like. And then we'll open up and you can click right here, click start chat, click tell me about your discounts, type that in. And as a last second, last chance option, you can get access to the Edge Finder for that 40% off discount before it goes back up to its usual price. Again, that is ending here very soon. So do not miss it. If you've been thinking about it, connect with one of us and lock in that price before it's gone. Jason, what's up, man? Jason, I saw that you got access to the Edge Finder, and I just want to say shout out to Jason for supporting the stream and now officially taking the dive, jumping into the software. And after all this time watching for months and months, he says it's worth it. And that's awesome. There you go. Fist bump on the stream. Thanks, Jason, for that. And I'm glad that you got your access, man. That actually makes me really happy, especially somebody who's watching every day. It means a lot to know that, you know, you've joined the ranks. You've joined. We haven't really, we've bounced around on what we call people that have the Edge Finders. The Edge Finders is kind of like this straightforward, but I think we could probably come up with something more in the future. And Jason, I saw your comment on YouTube too. You said, I'm going to use it as a tax write-off. And I love that because you totally can. If you're, you know, if you're trading and it is a business for you, then you're totally able to do that sort of thing. Now, of course, I'm not a tax advisor, so consult your local tax advisor, but yeah, should be relatively straightforward. Anyways, I want to jump into some charts here, see what we can find outside of just gold. So I do have a bullish bias in gold. I'm looking for breakouts this week, especially with the Fed funds rate, the ECB. I think there's a lot of volatility that could spike the gold price here, but also some of those yen crosses. Let's take a look at dollar yen. So dollar yen continues to be red hot here. And I've got a zone marked up here. You can see right around 134.8. If price gives us a pullback here this week, I'm very interested in potentially looking for some pullback plays, right? So I've got my fibs drawn up here, and we've seen a crazy run up. This is a run, by the way. So for many of you guys who may have missed what happened with the Japanese yen, why did it go so crazy? Well, it's because the Central Bank of Japan basically came out and said, yeah, we don't see raising rates, but not only that, we plan to hold rates steady or even go lower if necessary to keep the Japanese economy stable. So when you hear that, what that tells you is, okay, well, the ECB and the US are raising interest rates. Remember, when we talk about rates, what do rates do to the currency? If you're a regular viewer, this is your chance to quiz yourself. If interest rates go up for a currency, for a country, what does that do to its currency? If interest rates go up, if they raise the interest rates, for example, if the Federal Reserve raises interest rates, if the ECB raises interest rates, if the Bank of Japan raises interest rates, what does that do to the respective currency in most times? The answer is, drum roll please, the answer is it generally causes the currency to also appreciate, okay? This is because foreign investors are looking for yield. And when the interest rate in a country is higher and you can get more by investing in that country's bond or, you know, buying, you know, it creates demand for the currency, basically, right? The higher rate is more attractive to lenders. So lenders will go to that country and demand their currency at a higher rate because they need to, if you're going to buy US bonds, you have to use US dollars, right? So again, creates demand for the currency. Anyways, if interest rates in Japan are expected to stay steady or decline, yet in the US and Europe, they're expected to go up. Same with the UK, by the way. That creates a divergence where one is very strong and the other is very weak. This is what we would call a fundamental catalyst. And again, as we talk about most of the time on the stream, we talk fundamentals because most retail traders do not. They do not look at fundamentals. They just look at charts. And charts are fine, but I think that there is something to be considered when it comes to fundamental analysis as well. So give me 1 second, guys, here. I am just making sure everything is good on my... Yeah. So anyways, interest rates diverging is a very interesting concept when you have the dollar and the yen, or the pound and the yen. The pound yen really launched You can see here up. This is a crazy move here. So pullbacks on this one would be very interesting. 670 pips to the upside. That is a tremendous move in a very, very short period of time. So this thing is far away, but if it does pull back, I'll be paying attention to the pound against the Japanese yen. Also the euro against the Japanese yen. A pullback now even further to the 61.8% retracement also looks pretty good. And when I say pretty good, I'm talking about continuations, right? Bullish setups, looking for more upside. And the Edge Finder also has these things listed. So you've got dollar yen, euro yen, Swiss yen, CAD yen, pound yen. Interesting. Yeah. So that's kind of where I'm at with the yen crosses. I think they're overextended. I'm not necessarily willing to short this. In fact, I think that shorting this is a really dangerous trade. In fact, let's go look at these yens. I'll show you something real quick. Retail traders, what are they going to do with this? They're going to short it. They're going to short it thinking it has to come back down, right? Remember, guys, that this is a dangerous, dangerous thing to try and do. Because when this thing launches up on a strong catalyst, it could continue to fly higher for 3 weeks straight without a pullback. And many traders, they get themselves into a lot of trouble. And I'll show you, retail traders are probably short the yen crosses. Let's just go ahead and do minor currency pairs for a second. And actually, you know what? Let's see if we can do something. I'm going to try something. Can we do JPY? There we go. Look at that. Edge Finder proves its worth yet again. I just wanted to show you guys. Look at this. Wow. So this is retail positioning, and we track this on a regular basis using the Edge Finder. So we pull the client positioning from a few brokers, and we basically look at this and we say, hey, what are clients at brokers doing? Are they buying the dollar against the Japanese yen? Are they selling it? What about the Swiss yen? What about the euro, the pound yen? The reason we do this, guys, is a very, very notable thing. If we know that the retail traders, retail positioning, 90 plus, probably like 95%, but many brokers have reported that 90+% of their clients lose. Okay. So if we're looking at the Japanese yen pairs today, and we see that retail traders are shorting dollar yen, CAD yen, pound yen, Aussie yen, NZD JPY, euro yen, Swiss yen. Look at this. Every single yen cross on the Edge Finder, retail traders are shorting the pair. And if we know that 90% of them lose money, yet they're all shorting the Japanese yen pairs, to me, this makes them extra interesting on the long side. If this makes sense, in the chat, do me a favor. If what I just said makes sense to you, why we pay attention to this, type yes in the chat. Give me some yeses in the chat if that made sense to you real quick on what we're talking about with retail positioning. This is an anomaly, or this is a very exceptional example here today with the Japanese yen pairs, because again, they pop to the upside. And what do retail traders do? They short the pairs thinking, hey, this thing can't go any higher. But let me tell you guys something. They're not short from here. They're not shorting it right now. Retail traders are short from back here, and regular viewers of this live show, you guys will know what I'm talking about because we've been talking about this for a week and a half. It's crazy because, again, retail traders have been short here. They've been short here. And what are they doing? What is happening right now to the retail trader who's short with no stop loss? Anybody want to take a guess what retail traders who are shorting Japanese yen pairs, what's going on for them? Awesome. Lots of yeses in the chat. Thank you, guys. You guys are awake this morning. It's awesome. Good to see everybody in the chat, by the way. Thank you for being here. Thanks for the support, as always. What's happening to retail traders right now? They are getting crushed as this thing continues to run higher against them. Not only that, many traders are getting stopped out, blown accounts, margin calls. That's what's happening in this case scenario. So I'm not looking to be a part of that. I'm not looking to try and call the top here. I'm looking to join the move on a pullback. I'll wait patiently. If it happens, great. I'll look for pullback plays. Does that make sense? If that makes sense, if you understand the retail trap that's going on right here, type yes in the chat. If you get this, let me make sure we get some yeses in the chat so that I can move on from this topic. This is key. So many Forex retail traders, commodity retail traders, stock traders, every trader, they fight the trend and they blow accounts doing it. They don't put stop losses on. And again, we are out here every day sharing free game, free ideas, free concepts on this channel. So if you're enjoying this stuff, do me a favor, type yes in the chat if that makes sense to you, but also smash that thumbs up button and subscribe if you're new here. We do this every day. Get this free game. Literally, you just come on live streams. We do this every day. We have a good time. We have some fun. We make some jokes, mostly dad jokes, and we learn something, hopefully. So, yeah, cool. Lots of yeses in the chat. Thank you guys for the feedback there. It does help. Cool. So we have lots of stuff to look at. I'm going to be selfish for a second and show you guys a trade I'm in. I am currently still long. Oh, look at this. I love to see it. A good start here to that S&P trade. Let's see how we're doing. I'm long SPY, the S&P 500, and price continues. Love to see this. So I am currently long the S&P 500 on my Webull account, which is where I do my indices and gold trading, by the way. There's a link for that down below in the description if you're interested in getting that. Of course, it's for US people only, but we're floating about $2,900 on this trade, really running hot. And again, probably retail traders very short on the S&P. Let's go fact check that. Again, we'll go pull up the Edge Finder. We do have client positioning for indices as well. So we're going to take off this yen scan and we're going to just go indices. And I want to show you guys something else. What is retail doing with the S&P today? Retail is shorting the S&P today. Yet again, we see that the retail traders are piled in against the move. So we continue to hold on to this trade. I don't know how far this thing wants to go. This is why I'm trailing stops. So with my current trade on the S&P 500, I'm loving this. We're taking out the highs here today of last week. This is fantastic. I would like to see if we can put in, if we could continue to trail higher. I'll look to trail this stop further into profit. I have my stop loss. Let me fix my zone here. This is going to bother me. Let me just get rid of this. There we go. Okay, so I have my stop loss in place. I think it's getting close to the time where I would like to trail this stop further. I'd like to give this thing a little bit of breathing room. I don't want to put my stop right here, but I am watching to trail stops further into profit here on this S&P runner. This is a fantastic trade so far, and we're going to see if we can continue to hold it. So yeah, should be interesting. S&P looks real good. Gold also was popping earlier. It seems to yet again have been stopped around this previous high, around 2008, and we'll continue to watch for that breakout, which we've talked about a little bit here. By the way, guys, I mentioned this earlier, but I want to mention it one more time here. If you guys are not already using the Edge Finder, this is how we're pulling up retail positioning. This is how we pull up the smart money tracker, the COT data. This is how we look at fundamental analysis when we talk about interest rates or if we talk about inflation comparisons. This is what we're using every day. If you guys want this software, it is currently on its biggest sale price of the entire year. And that sale price is actually ending tomorrow. We are finishing up our sale. We extended it by a day and a half so that people who are last second interested in getting it can get access to it. So click this link. It's just been dropped in the chat. This is going to connect you with a live chat conversation with one of my staff members here at A1 Trading. We have people standing by who are getting access granted to people right now. If you want your access today, click this link that just got dropped in the chat. It's on the screen right now. It's going to open up a conversation with one of my staff members. Either Emily, Hallie, or Drew will answer your message. Chat with them here. Click tell me about your discounts. They are here in person in our office and ready to set you up and get you trained with the software. If that is something you are looking to do today, if you've been thinking about doing it today, at least ask us about the discounts, because again, they are the biggest discounts that we're going to have all year long, and it is ending soon. So if you've been thinking about getting it, do not hesitate. It is actually your last chance to get this price. So yes, retail positioning for gold, please. Yeah, let's go look. Let's see what's going on with retail positioning here for gold. So we're going to just do commodities and we'll see gold and oil here. So in terms of oil, retail traders are long, but in terms of gold, retail traders very short, which I actually really like. I think that that gives more upside here for the gold market. Nick, I have the Edge Finder Pro. That's awesome. Congratulations on having access. It's really, I mean, I know obviously I run this company, it's a software company, but these tools that we've built are genuinely like the dream trading tools that I always wanted. And, we've spent the last year building them. So being transparent, I mean, we've worked so many hours to build these tools. We have so many great people involved in building them. And again, that's why we've done the 1-year celebration sale and extending that offer to people who want access for that discount. So what I'm noticing for gold is, again, we continue to bounce off of this 2010 level. I'm not interested in shorting it. I've mentioned several times, my goal is to look for a breakout. For those of you who are watching it as well, I'm looking for that trade. If I can get it this week, great. If I can't, I'll continue to wait on it. I've been waiting on it for a long time. So we'll see if we can get something to finally break there on that 2010 mark. So yeah, let's see what else we can find. Looking at the pound, look at this, guys. Pound able to break above the previous highs here. This is big. In fact, this actually looks really strong for the pound. We're going to go through the pound dollar and maybe go double back in pound yen in just a second. We're going to take a quick break. We're going to hear from one of our sponsors here. James is going to jump in and do that. So, James, take it away, my friend.
Attention A1 Trading Show fans. Are you looking to get access to the Edge Finder for free? Our partner broker, 8cap, is offering the fans of the show 100% free access to our trading software. To get your access, all you have to do is click the link down in the description below, sign up for 8cap, and deposit $1,000 or more into your personal trading account. And then just let us know when you're done. 8cap is a regulated broker that offers many assets to trade, flexible leverage options, and has amazing customer support. So again, if you want access to the Edge Finder, that trading software that Nick has been using all stream to get retail positioning, to look at the watch list, to look at all sorts of different stuff, you can get it 100% for free. And all you have to do is create an account with 8cap. There goes one of my lights. Here, I'll hold this one closer. You can sign up with 8cap, deposit $1,000 or more into your personal trading account. Let us know when you do so, and then we will get you hooked up with Edge Finder access for free. Nick, back to you.
James, for that. And yes, guys, the link for 8cap is down below in the description. They are one of our partners here, making this stream possible for us to be here each and every day throughout the week. So pound dollar here, if we're looking left, had major resistance around the 1.2540 mark, let's call it. It seems to have broken out. And this is actually a beautiful candle showing the strength right now of risk on assets. Pound, of course, leading that charge, especially with the S&P trading higher. If you're watching the pound, this looks pretty optimistic, in my opinion, for potential bigger moves to the upside. I mean, this could offer sort of a launch pad move for the pound USD. Now, part of the reason that I've been sort of softly bullish on the pound against the dollar specifically is, of course, the dollar has been pretty weak recently. Part of the reason for that is, again, expecting the Federal Reserve to sort of taper off and begin its sort of pause in terms of the rate hike cycle stuff. And meanwhile, you have the UK, which has really high inflation levels. So I want to show you this because this is, whenever I talk about the pound recently, I've had to pay attention to this. So if we compare the pound and the dollar, we're looking at the UK and the US in terms of inflation. What you'll notice is that in the US, inflation is sort of fallen off, whereas the UK has had incredibly sticky and very high levels of inflation at 10.1% compared to 5% here in the United States. Still high, but again, this red line here, guys, is very telling about the pound. What it's showing us is that, well, the pound, the UK, has really bad inflation problems right now. And that's going to mean that the Bank of England is going to have to raise rates. They're going to have to raise rates to squash this inflation problem. Remember, if you've been watching the video today, if you've been on the stream with us, we discussed earlier that higher rates for a currency generally mean more upside. Again, higher interest rates from a central bank generally cause a rise in the currency. So when we see the US sort of potentially going sideways, or maybe one or two more rate hikes possibly, but then you have the UK, which might have to do 3 rate hikes, something like that, to get that inflation problem under control. I think that the pound has more upside. So it's an interesting trade nonetheless. Again, we're going to jump back to the S&P 500 trade. I'm being selfish, but I just want to keep an eye on this one, of course. It is the one that I'm trading here. So I'm long SPY, the S&P 500. I'm also interested in the Nasdaq, but it's gotten away from me a little bit from where I'd like to add to this trade. So I'm not really looking to add to the Nasdaq trade that I have, but I am long SPY, long Nasdaq, and keeping an eye on the indices. Gold also still can't break. If it does break, that is, of course, one of my prominent top priority trades right now. So yeah, keeping an eye on that one. And again, for those of you who are inside of the Discord, I'll be updating my S&P trade pretty soon. I would like to trail stops further on this position. I called this one out last week and have continued to hold on to it. I'd like to trail this one higher as we now are actually breaking out through previous highs. So S&P 500, here is your 15-minute chart. You can see on the open, we now have a pretty good, in fact, I need to, I'm going to adjust this zone here. In fact, let me go to my 4-hour chart. I'm going to tighten up my structure here. Okay, let's actually just start fresh because this is messy. Okay, so what I liked, and currently my stop loss is just below this low, and where I entered the trade was back in this area here. So I entered here, stop loss is here. What I'm watching for is to see if we can actually truly break this level of supply. On this breakout, I will trail the stop further. For those of you who are watching my trade inside of the Discord, and again, here's the actual trade on my broker. So, so notably, this white line here represents the same thing. I'm looking for a strong break above on this 4-hour chart. If we can get it, I'll look to trail stops further into profit. And again, going to continue to try and run with this. Nick, what's your thoughts on Bitcoin? I have a trade open on Bitcoin. It is more of a swing. It's not going so hot. I'm down $500 on this trade. So it's a longer term one though. I mean, this is not really a short-term technical trade by any means. It's more of a longer term swing trade. And you can see my notes on this one. I have sort of a longer term outlook on Bitcoin, willing to add a couple times to my trade. Full transparency, this is a very, very small position on my trading account. It's 1/4 of a Bitcoin. So it's a really small position for the account, but I am willing to add to it. So I would like to add to Bitcoin. If it does come down, I'm actually happy to build a bigger position. Now, of course, this is not, a big position on the account. So transparency, I'm not trading this aggressively. This is sort of a longer term slow trade. And again, I'm targeting 39,780 around 40,000. If it gets there, this trade will be a very profitable trade. And if this trade continues to go against me, it's one that I'm willing to dollar cost average in. So different than my traditional momentum bit trading strategy, I do have also a dollar cost averaging strategy that I do as well. And the key thing about that is when you dollar cost average, you have to be so careful because you can get yourself in a lot of trouble buying something with a lot of size and then it goes against you and you're willing to hold. So for me with Bitcoin, I am willing to hold, but it's a small position. And that's something very important to note. The S&P 500 getting some rejection here. I'd like to look at what's going on with the bond yields here. TLT bonds dropping off. Really interesting. Wow. Is that yields up today? So let's go look. Bonds market. Yeah, yields jumping today. Wow. The 3-year, the 2-year. And again, that's probably driving dollar yen higher. Yep, look at that, dollar yen driving higher here this morning. I am actually long dollar yen as well, which is awesome. Shared this one inside of the group. So we've got some winning trades on today. This is fantastic. Bought dollar yen last week, also euro Swiss. Both of those trades are on. Continue to hold them. This is based on Smart Money Tracker. I've got a position trade on dollar yen and euro Swiss. Here's the euro Swiss trade.
So going well also, so we'll keep eyes on that one. So a couple currency trades, indices trades, and crypto trades. We are all over the place with what we're trading right now. Honestly, that's the way I like it. I don't trade just currencies. I don't trade just commodities. I don't trade just indices. I kind of trade a mix of all of them. If I'm being in terms of sizing, and we did just get PMI numbers. I'm sorry for missing that, guys. That was my fault. In terms of sizing, indices, of course, being the biggest allocation of my portfolios. Okay, so we had ISM manufacturing PMIs just come out. Slightly higher than expectations here. Manufacturing PMI, manufacturing prices. Interesting. Okay, let's go through this real quick. So ISM manufacturing PMI, this is the level of a diffusion index based on surveyed purchasing managers in the manufacturing industry. Above 50 indicates industry expansion, below indicates contraction. We got 47.1. Leading indicator of economic health, businesses react quickly to market conditions and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. Survey of about 300 purchasing managers, which asked respondents to rate the relative level of business conditions, including employment, production, new orders, prices, supplier deliveries, and inventories. Okay. And again, as it said, above a 50 indicates industry expansion, below indicates contraction. So we're seeing some contraction, which is as expected in some ways. However, manufacturing prices, which is more of a measure of inflation here. Level of diffusion index based on surveyed the manufacturing industry, this is a component of PMI, but reported separately as an inflation gauge. Above 50 indicates rising prices. Below indicates falling prices. It's a leading indicator of consumer inflation. When businesses pay more for goods and services, the higher costs are usually passed on to the consumer. So we had higher than expected inflationary prices on the ISM manufacturing prices that came out this morning. That's really interesting. Of course, dollar could get a pop from that. And there it is. A little bit of a bump to the upside and makes sense why we're seeing a little bit of decline. Yep, some decline on gold now, right? Again, fear around inflation being sticky, inflation being problematic could cause the Federal Reserve to need to raise rates. Of course, an interesting report here, but we have big news coming on the rest of this week. So we'll see if this impacts what's expected here on Wednesday with the Fed funds rate. Tomorrow we have Europe CPI numbers. Those are also really big. Very, very interesting stuff to go through here this morning. Again, Fed funds rate on Wednesday will be big, but also the FOMC statement. This is going to be very important. Now, the thing I'm going to say is I think that the Federal Reserve has been seeing, and there's been lots of sort of sticky inflation numbers coming out. I think it's probably fair to have the view that the Federal Reserve is going to come out a little bit hawkish on Wednesday. This is my take on it. Again, a bit tricky to sort of forecast what the Fed is going to say, but there's been a lot of sticky inflation numbers coming out. We've been reading this. We've been watching the news coming out, and several times it's been sticky inflation seems to be there. And that could cause the Fed to be stubborn on Wednesday and look to potentially even talk about raising rates again, which, could be very interesting for gold, the dollar, the indices, etc. Despite that, earnings have been pretty solid for stocks. So in my opinion, I think they're weathering the storm okay, and that even though interest rates may go up, stock market still might be okay. It's my take on it.
I'm a little bit of a bullish, if you can't tell already, but that's where I'm at. Angeline says, can we check USD CAD? It's interesting how the dollar's rising upon news, but seems to be selling off with the CAD. Let's take a look at the dollar CAD here. So dollar CAD here on the 4-hour chart. Let's see. Dollar CAD overall gets a nice strong buy on the edge finder. COT data shows a lot of preference for the dollar over the Canadian dollar. Retail traders are short this pair. Seasonally, the month of May is negative for dollar CAD. Trend to the upside. GDP, unemployment, and interest rates favor the US, and inflation favors Canada. So, and again, we had some positive numbers come out for the dollar here this morning. We're seeing a little bit of a pop here on this new candle. So this is a 1-hour candle here. And saw a little bit of a pop, not too much of a difference. The thing is, again, at the end of the day, it's going to default to what happens on Wednesday. The dollar might jump around here, but again, I think markets are going to be very focused, laser focused on Wednesday's meeting. So in my opinion, dollar CAD looks interesting in these areas around that 38.2% retracement. It's not my favorite trade right now, but it's not my least favorite either, because again, we have a lot of things that go in our favor here with dollar CAD. If we go look at the smart money tracker, for example, the Canadian dollar still has a very heavy short interest from institutional players. So big money is very short the CAD, and they're pretty dang long the dollar, right? So if we compare these two specifically, the CAD and the dollar, we have 74% short ratio on the CAD and 64% long ratio on the dollar. Now, this is, of course, from the Smart Money Tracker. This is the COT data that we have on non-commercial positions, showing a strong preference for buys on the dollar CAD. So I don't hate the idea of a possible pullback here. This is more of a daily chart level, in my opinion. You had this sort of downward trend break here to the upside, pulling back. Should be interesting to see how this Wednesday report plays out. But again, I think I like the risk reward on dollar CAD personally. Might be an interesting one to watch. I want to take a quick look at the Japanese stock market here, see how things are playing out there. Big pop here on the daily chart today. Wow, strong break. For anybody who trades indices, this is an interesting one. JP225 has been really, really strong, the Nikkei. Pullbacks could be interesting. Continuations. What about NAS 100? NAS 100, big pop here the last couple of days. I am long NASDAQ and also long S&P. Here's the Dow. Dow seeing some strength. There we go. And again, indices just look like they have room to run. Even if we get pullbacks this week, I'm very interested. Even if we get, even if we get Fed funds rate comes out 25 basis point rate hike, and then they also talk about another 25 in June, I'm still interested. I'm still interested in looking at the indices on the long side, especially on pullbacks. And again, part of the reason for that is the earnings reports that we've been seeing have been really, really good. I mean, you have, for example, Microsoft. Look at this. Microsoft had great earnings and has continued to drive higher. Meta, great earnings, stayed and held those gains. That's really big. JP Morgan, right? Banks doing quite well. Despite some of the fear that have come out. Not all banks, but some of the big names like JP Morgan, a notable bank, doing quite well, a very large bank, right? So then you also have, and what we are looking at individual stocks. We have Apple this week. Apple will be very, very interesting. We have earnings reports and earnings and revenue coming out this week here. Google performed really amazing, right? Continued to hold its gains. I mean, this looks promising for big tech. Now, in my opinion, that's part of the reason why I continue to hold my S&P long trades. I'm watching for a breakout. If we break out of here, I'll continue to hold my indices long. Now, I don't trade individual stocks very much. I invest in individual stocks, but I trade indices. And so for the indices traders out there, I am looking for something like this here. I'm looking to trail my stop. I've already got a trade open on the S&P. And just looking to sort of maintain it this week. I'm trying to trail my stop loosely because, again, we have Fed meeting on Wednesday, which will almost certainly cause volatility for the indices. So I don't want to trail my stop just to get it whipped out on a crazy spike. So I'm sort of trailing conservatively on this. Aussie dollar. Interesting. Aussie dollar popping here a little bit. Tagging that 61.8% retracement. And seeing some rejection. Honestly, though, the trade I liked was at the 50. I'm surprised it was able to break so easily through that 50 here. Because I didn't really like the 61.8% nearly as much as I like that 50, and that 50 did not hold. So I don't know that I love the Aussie dollar sell right now. I'd like to see this thing roll back over here. Again, I like that 50 a lot more than I liked 61.8, because looking left, there's not nearly as much structure here as there was sort of at that 50, right? How often do you add on winners? Occasionally, if I really like the trade and I've got to stop trailed and I'm no longer risking anything, I might choose to add risk to the trade by adding to the position, but it is rare. I don't do it very often. Let's take a look at the euro here. Euro sort of stuck in a range. Should be interesting to see if we can break one way or the other there. Take a quick look at oil. Oil trending down lower. I have a mild bullish opinion on oil, but not with price action looking the way it is right now. If we start to see sort of breakouts on oil to the upside, I'd be interested in potentially a long trade. We gapped open to the upside here 2 weeks ago, traded higher, and now filled the gap completely. Why am I bullish on oil? Well, I'm not from a technical standpoint. I won't take any trades when the chart's looking like this, but I like it from the perspective of, well, if there's any chance that we avoid a recession, which there is a chance. I mean, a more extreme recession. It depends on who you ask if we're in a recession or not right now. But the idea of if economies start to return to normal kind of thing, if we continue to see inflation decline and things like that, oil could be a really upsided trade, in my opinion. Because again, if you have the China reopening situation, that causes a huge demand for oil. If you see central banks sort of start to slow their roll kind of thing, that could have a lot of impact to the upside on oil as economies start to get rolling again. It's an interesting thing. Use support and resistance primarily, no other indicators. Andrea, yes, that is correct. I very much just sort of rely on price action and support and resistance, but that's not how I take so I explain this often, but the basic concept is I use 3 principles in my trading. We have technicals, fundamentals, and sentiment analysis. I enter the market using technical analysis, meaning these are my buy and sell signals, but I don't pick direction with this. So I might get a sell signal, but if I'm only bullish due to the fundamentals and sentiment, this is how I pick direction. I'm only going to trade in the direction that I get from this. I hope that makes sense. But the idea, for example, I'll give you an example because it's a little bit more easy to understand. I'm bullish on gold right now for several reasons. But one of the big reasons, of course, is that inflation is very, very high right now. And in atmospheres of high inflation, gold tends to do pretty well. In fact, we've seen that gold has done really well, right? In a high inflation period. But despite that, gold right now is choppy. So even though I am bullish on gold, there's nothing for me to trade right now. I am looking for a breakout to the upside. Now, a purely technical trader, they might say to you, well, I'll sell it if it breaks here. Now, and that's fine if that's how you trade, but that is not what I would do, right? I won't take a sell trade, period, on gold right now because I'm bullish overall. It's just not technically, on the technical analysis side standpoint, it's not playing nicely, if that makes sense. I'm looking for this thing to break out and show me signs of bullish trades, bullish trade setups, and then I'm looking to go in the bullish direction. So there's no situation right now where I like selling gold. And again, I use fundamentals and sentiment analysis to pick a direction, up or down. And then I use technical analysis to actually find a favorable entry and exit. Again, most traders, what they will do is they will only look at charts. And charts are fine. I don't ever mean to say that in a way that's like, oh, technical analysis sucks. It's just that technical analysis, in my opinion, misses a very large component to the picture, which is what's the story of the market? The story of the market comes from the fundamentals, the central banks. What is inflation looking like? What are interest rates at? What's geopolitically going on with the world right now? Is China doing something? Is Russia doing something? Is the US doing something? And how can that impact trades? For example, what I just mentioned with oil, right? If you're focusing on the story, the fundamentals of the market, you have to consider that China reopening is going to do something to this chart. The chart may look bearish, but a potential development, a China reopening sort of situation could cause this chart to really, really rise. So I want to be aware of those things and look for directional based trades. Hopefully that makes sense. Again, that's what we do. That's what we focus on the stream. If you guys are enjoying the stream, make sure to hit the thumbs up button, subscribe. I'm going to end it there. It is just me today. I hope that you guys got a lot out of this. And if you did, make sure to subscribe. If you're newer to the streams here, hit that subscribe button, hit the notification bell next to it. It will allow you to get notifications for when we go live on the show here. And that way you can tune in. So remember, guys, today is the last day that we're doing our sale on the Edge Finder, our market scanning software that helps to find fundamental and sentiment-based trades. If you do not have access to this tool and you would like access to it, click this link right here. It just got dropped in the chat. And send us a direct message. You can contact one of our team members there and get your hands on a copy of the software here today. Thanks very much for tuning in to this video, this stream, and we will see you back tomorrow. See you guys.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And remember, if you open a $1,000 or more trading account with 8cap, you'll receive a free copy of the Edge Finder. Click the link in the description below to find out more. From all of us at A1 Trading, have a great day, and we'll see you next time.